Hey everybody, welcome back. Well, we have a lot to go over tonight between Bitcoin, what's going on with Krispy Kreme and McDonald's, why this is really good news and why some people might be stuck. We're going to really dive into that tonight so you're able to find these ideas for yourself. Why is Swave up? Bunch of names to go over and what's really happening with the volume. But first and foremost, I just want to start here with Bitcoin so that we can take a look at this and understand what's happening. Here is the previous high. So if we drop our line there, we can come across. And this is why it's important to understand why this level is so critical. This is where we were before. There's the rejection complete, as we refer to it, Matumbo. Pulls back, rallies, breaks through, breaks. Looks like we're going to roll. You have a DTL, downward trend line right here. We'll pop that in. We had that in recently for you and showing it. And then on top of that, we're just going to put the simplest of moving averages in. We use a 12, a 22, and a 55. You should use what you're comfortable with. But you can see the 12-22 cross there, which kind of would give you a feel of that's probably not going to break. So I always think it's really important that people get this, that, hindsight's a beautiful thing. When you look at these charts, this is why I like TradingView, you can replay it. But when you look at that chart and that's what you have and you reject, then you watch it play out and go, oh, we're pushing. We're looking for that confirm. And then you get the confirm right here, only to reject. The confirm is when you break out, make a higher high and close over it. So if you had this over, I'm not going to redo it, but if you had this over, then you'd be like, oh, okay. Then you break down, tries to rally, rejects that core level, breaks the 22, you get a bullish engulfing, form a DTL. Bipolar is an understatement here. So now you see where you're at, and now you're above. The question is, are you going to push? Are you not going to push? I think that you have a lot of potential going into the week for this, and I'm going to explain why I feel that way. But most important, you want to make sure that you're above that critical level. I have it marked off at 69,206. What we can do is just go right back to that level. You can put the magnet right here and just drop it perfectly right there and see exactly what it is. So you're at that 68.5 level is really what you want to watch. You just want to pay attention in there, and you can see that same battleground, and actually it's actually more pronounced right in there. So we want to pay attention to that. Now, what are the names that are doing really well there? What are the names that are doing poorly? Let's go through a couple things before we jump into the meat. I think it's important to understand that even Clean Spark and how it's saying to break out, we're going to clean all this off. You're not getting that umph. That umph is the push that you need. And if we take a look at this, what we're getting, pull this up. Look at that volume. Look how light that volume is. That's probably going to be like this with Friday being off. And then, of course, we have a much larger issue that we'll address on why Friday is problematic for the market in a moment. But if we see this and we see how it's playing out, let's put this bear in, we were unable to do something. As Bitcoin made a higher high today, what were we unable to do? We were unable to push. Now, if we drill into this on a 5, and I like to take a look at this because this should have gone, and it didn't. As a matter of fact, you popped over and rejected. And this is the kind of nonsense that you're seeing right. So you have to be aware of the nonsense. If you take nothing from this video, be aware of the nonsense that's out there right now. They pop you over, they make you feel all warm and fuzzy. This time it's really going to go. You're feeling good about yourself, I'm a winner, and then boom, all your hopes and dreams are smashed. Next thing you know, you're not honoring your stop, and now you're down $1, right? That's why you always honor your stops. It's the cheapest way out of a losing trade is to what? Honor your stop. Say it with me. Okay, good. So here we are, and we're seeing more and more of this nonsense. Go and take a look at MSTR today. Look at the pop over. Only to reject, pop over, reject. Now, we'll see what this does. I have been carrying a trade overnight on this when you close at all-time highs like yesterday. I didn't do it. And the reason I didn't is because I don't think you have the volume. The real trade on this might just be at the end of Thursday night, but we're going to talk about that as well. You're starting to try to trade up here after hours. I'm not so sure that I'm buying what they're trying to sell right here. That's a pretty nasty reversal. The open is the high and the low. I actually had a trade on today that did not work. I think it's very important to talk about trades when they do not work. There's too many people out there that just pretend that all their trades work, and that is just darn foolish. But I tried to get ahead of it here. They popped to me over like it was going to go, and then what did they do? They broke it down. And they did a great job of it too. But you see that like right there, that higher high right into it? It was perfect. So they just popped you over like it was going to go, and then 10 minutes later, complete rejection off that level. So now you know where that level of rejection is, and you know that tomorrow as well, you're probably going to want to watch this level as well, that 271. You went through it like butter. There's very little to stop you here to get back down here. What usually happens with these kinds of days, when you have a sell-off like you had, and let's be honest about this so we're all on the same page, okay, we're talking about 35 basis, right? Like, we're not talking about the end of the world. I think we were down 32 basis points from yesterday's close. We'll just measure that off so that you get it. Yeah, I mean, 33 basis points. Okay, the sky did not fall today. Things just did not go up, and they didn't act accordingly. And so that people are sad, right? And then you see that last hour of the day and you see the selling. It is what it is. But what we want to do is we want to mark off these levels. So tomorrow on the Qs, you're going to want to watch that 442.54. Usually there is a flush, and then after that initial follow through. Now anything can happen. I'm just saying that in the way that this usually plays out, there is a flush. And then after that flush, that's when things start, as I refer to it, they just start motoring a little bit. So that's definitely something we want to pay attention to. But let's talk about the issue. This is your issue. Well, there's a couple issues, but this is the big one. So we're closed on Friday, and in their infinite wisdom, they decide to come out with PCE at the same exact time. So they're going to come out with PCE at the same exact time that the market is going into a long weekend, and after GDP comes out on Thursday. This is problematic. Now, what's interesting about this is the only thing that you're going to be able to really trade is crypto. That's all you're really going to be able to trade on Friday. So I think this is kind of interesting timing for this to come out. And then you have Powell speaking as well. CPI, remember, CPI was high. PPI was higher relative to CPI, which means corporate profits are at jeopardy. Remember, people think that they can pass through the cost. They can pass through the cost only for so long, and we're already seeing cracks of that. You'll remember that piece on Dollar Tree. Remember, GDP is on Thursday. Click off the rest of these. We don't really need them. But you remember that piece on Dollar Tree that we went over about a couple weeks ago. Dollar Tree's fastest growing market. Why are they getting out of certain areas? $125,000. That is the market that they are now going after. The guy that's at $125,000 or girl that's at $125,000 a year. That's their new target. Okay, that's who's going to Dollar Tree. So those costs are not passing through the same way. And this is becoming problematic. So at the same time we're seeing that, we have PCE coming out on Friday. Well, what are you going to buy going into that? Well, if you buy gold, how are you going to trade gold over the weekend? Most people don't have access to do that, right? So what are you going to trade? You're going to trade Bitcoin. That's the only thing that really you're going to see people get involved with. You're going to see them trade Bitcoin going into that. So the MicroStrategies of the world, the coins of the world, the CleanSparks, the IBITs of the world, no matter what side of the aisle you're on, I think what's the other one, BITI, right? No matter what you do here, these are the names that are going to move, whether you're bear or bull. This is going to be the vehicle pushing into Wednesday, Thursday. So what we're seeing right now, volume-wise, if we take a look at the SPY, is we're seeing a lot of people go, let's pop the volume in here. We're seeing a lot of people say, wait a minute, why in the world going into GDP, a 3-day weekend, and no access to PCE? On top of that, if you watch last night's video, you know that you don't even have corporate buyback. So when people are stepping away, like take an example with like NVIDIA today, even if they wanted to buy their own stock in the open market, they might be in their blackout period where they can't buy their own, right? Which means these things are just going to come down. And we're seeing people just step away, like people stepped away from ARM today. This really isn't shocking. We know that Sun's out there. We know that he's registered to sell stock. So it's not a shock. The shock is that they're that foolish to try and do something like that today, candidly, and that's what you're seeing. And to me, if you were to take a look at this and put in the simplest of moving averages, then you would see that we broke the 12 and the 22, and here's the 55. So when you look at something like this, for this to come down to 108 pretty darn quickly wouldn't be that shocking. I use a 12, a 22, a 55. You should use what you're comfortable with. So we have this PCE that's coming out. So that's the one thing that we have to wrap our heads on. But there are opportunities in the market. Now, what we have is individual stock risk, right? Well, we always have individual stock, but people are going to gravitate more now to those names that have nothing to do with the market. Now, they all have to do with the market, but the Reddits of the world, which we traded today and we traded last night, did quite well with, these kinds of names, they have no material effect really on the S&P. In other words, you're not really trading or fighting with institutional money. You're not fighting with corporate buyback money when you're playing this on a Tuesday for a pop with everybody else that's on like their subreddit saying, you know, to the moon, diamond hands, and you know, who's left holding the bag, right? You're just trading these, and that's what you're doing. But these kinds of moves like Reddit, ALAB, these kinds of moves are going to do that. Also, news is going to do it. So your job is to find the names with the news that have the potential to also be something that could be some kind of, we'll refer to it, short squeeze. We're going to get into how to identify this. But I did this today, and people were kind of shocked by this, and I want to point this out again. This is IPO. This is something that anybody could just buy. It's an ETF. IPO gets access to, guess what? IPOs. Institutions get access to IPOs, meaning they would be able to buy Reddit and get Reddit down here. You, with your trading account, me with my trading account, we're not getting thousands of shares of Reddit, right, at the IPO price, but IPO is. So if you start seeing more and more issues and you're trying to say, how can I get involved with this? Well, you'll notice that if we come to April and we take a look at this, that you'll notice that you're at 52-week highs. That's because people are buying this. The other thing, understand that. The other thing is people like Kathy Wood get access to this kind of stuff. What you will notice here, I'm going to just show you this. There is a pattern here, and this pattern is not following right now. But IPO to here, download this for later, but IPO to here, look at the difference. But now if we come out and we look over a longer period of time, look at that connection. So when you start to see the divergence, something's going to give. And usually one is leading and one is lagging. So we would expect Arete to lift here, something to think about. But if we're trying to put ideas together, trying to figure out where we're going and what type of ideas to look at, a great example of this is going to be Krispy Kreme. This is one that we traded in the community today and we did exceptionally well with. Now, there's a couple things here to look at, and there's some different ways that you should be understanding how high this can actually go. Because I think some people are not truly understanding what's going to drive this move. So I'm going to put this on a weekly for a second, so you can just kind of see where we're at and just get the whole movement in. What this is going to do, this is right where we had some issues. But we're going to put that there for a second. And let's take a look at the news. Now, the news, and I apologize, but it's in white, and I know people like the black background, but it is what it is, and this is what we have. Krispy Kreme to provide fresh donuts daily at McDonald's restaurants nationwide. Phased rollout will begin 2H24 with nationwide availability expanded by 26. In the next 18 months, every McDonald's is going to have Krispy Kreme. This is a sickly brilliant move by Krispy. You don't need stores. You give them a piece of the profit. Everybody is happy. McDonald's has something else that they can sell their clients. All of a sudden you pull in, you get your coffee, and you get a 6-pack of donut. It's actually sickly brilliant that they came up with this move, and I would expect both to benefit greatly from this, specifically Krispy Kreme. I want to show the article so you get it and understand. I think it's a really brilliant move. The street thinks it's a really big move as well. We'll see how it goes, but I just don't see how they're going to falter from this. A lot of people just don't want to go out of the way to go to one store for Krispy Kreme donuts, right? They're going to want to go where they're already picking other stuff up. So it just fits out perfectly. Now, that said, we take a look at how the stock acted today. Stock acted great, and we'll see some things here and we'll see some behavior here. And now when we talk about behavior, what we're looking for specifically is, are we seeing these spikes? Well, they identify the mark over in the beginning of the day, and what we start to see is you start to see these wicks. As we know, wicks are what? Wicks are price rejection. So you mark off that first 5-minute bar. Once you mark off that first 5-minute bar, you have your range on the day. We were unable to break that. So I actually bought this off the open, did the undercut, got out of a portion, and then when we flipped back over, started adding to it again and again and again, building a position during the day. So I did quite nicely with this, and just disclosure at the time of this closing, I have a very large position according to the size of my account for me in this, and I have a bunch, and I'm going to walk you through how you can get there as well and some sites that you should use that are actually free sites that would help you identify moves like this. So you might want to watch this a couple times, or you might want to save this one, because this will show you how you can utilize the same tools I'm going to show you. And all the tools I'm about to give you, they're all free. So you can literally go to these sites for free and get this data. I don't use just these sites. I have other data sites, but I'd rather show you the free sites just so you can do it, again, for free. So you have your levels marked off, but there's one thing that you're starting to notice here. What we're going to do now is, just we know that this is donuts, and we're going to just pop in the vol. And we're going to get rid of the side for now. And then you see the valley, and then out of nowhere, you just start seeing, 1 million shares every 5 minutes, which is a lot of stock. And you start seeing the buying into the end of the day, right? And you just see the lull, and then all of a sudden the explosion as soon as you got back to this level. So whoever was here that was willing to sell, they were no longer willing. And that's always important to mark off these bars. It's very hard to work off that wick. It literally took you an hour and a half actually to work off that wick. And once you worked it off, did the pullback and ran, you did one retest and you never looked. And that's a very important distinction, but there's more to that. Now in front of us is a website, and the website is shortsqueeze.com. You can see it right here. I just have Apple in here. But this is a free site. Now they have where you can sign up, sign in, take a tour, and they will have some data here that you could possibly pay for, like the proprietary data and some other stuff to update it, like to view the short squeeze ranking or the daily short sales volume. They want you to pay. And that's fine. I mean, they're entitled to that. It's their service. But what we want to focus on, we want to look at this and go, okay, what are we really getting from this? What can we focus on here? So, well, very simply, if we just go here and type in DNUT and then hit there, Okay, we get donut, we get Krispy Kreme. What does it tell us? Well, where it closed yesterday. The important data point on all this, one important data, it tells you the date, it tells you that you're delayed, it tells you everything, quite frankly, that you need to know. And so what are we really getting from this? Well, we're getting one piece of data that I think is really very pertinent. We're getting days to cover. Now, days to cover is if you take the average daily volume, obviously today's volume was greater, and we can walk through that. But if you take the average daily volume and the short interest wanted to cover on the average daily volume, it would take them 16 days. That's an absolute insane amount of days. Now let's say that it spiked and you got double the volume. That is going to take 8 days or 2 weeks of trading. That is still insane. So you have the double volume, you have 2 weeks of straight cover. Okay. So this means that people are trapped. We're going to get into this in greater detail. So this is the first site that you could use, shortsqueeze.com, and this would allow you to see how many days. So just to give you an example, if we take something like NVIDIA, and this is going to be delayed, so like this kind of stuff in here, it's all delayed data, so like they're not going to have the right numbers here, but this stuff's fairly accurate, or they're going to have days to cover, 0.6, etc. It doesn't really matter. You go Microsoft, same thing. This number's not going to be accurate, but this data is going to be accurate on days to cover too. And it doesn't matter what name you pick, Mara, really doesn't matter. This number's usually off, but then they're going to tell you where you're at on days to cover. So when you look at something like DNUT and you look at Krispy Kreme and you have 16 days, that is a huge number. Now, there's more to this. And what I'm trying to do is show you where you can go to these free sites. This is Market Chameleon. Now, people can pay for this. There's a free trial, and there's more bells and whistles if you do. And you can see that they even have a little bit news alert here where they're telling you what's going on out there in the world. So what we're going to do with this is we're just going to click this unusual option volume. And this is all free. And we're going to go to this. And what we're going to do is we're just going to hit symbol, and we're going to sort by symbol. And then once we do that, we're just going to see if any of the names that we're looking for are in here. And lo and behold, here we are with Krispy Kreme. So pull this down for a second, look at what we actually get. So we can see that we're on the unusual option list, but there's a ton of names that are on the unusual option list. So there's a way to sort to see the validity of, is this something big or is it really? So the very first thing that you'll notice, besides getting the description, and then you can say it, right? You get the volume, you get the average volume, and then you get the relative volume, meaning this is how many option contracts you usually trade, or this is how many you traded today, rather. This is the average volume that you're usually trading. Usually they do it over 30 days. This gives you sentiment, and then they don't want you to see the sentiment, pay for it. Stock price, et cetera, catalyst events, if anything's coming out. The Krispy Kreme, this was February for their earnings, no big deal. But this is also very important. They give you implied volatility. They give you the change in percentage, and they give you a rank of where that volatility is. Okay? So if you have extremely low volatility and you go to from extremely low to extremely high volatility, that's going to be important. Now, this is where it gets super interesting, and this is something that you could use daily, and you might want to remember this. All I have to do on this and go, well, that's really interesting, and I really like this, and I think that this is going to be. All I have to do is just click relative volume, and it will sort by lowest, and then you'll see that Krispy Kreme is at the highest level of relative volume of any stock out there today, bar none. So now we have a stock that is trading at a huge premium from where it was. On top of that huge premium, what else do we know? We know that there's 16 days to cover on the short side. I wonder which options they own. Well, we're going to show you how to figure that out too for free in a moment. So now you have 298 here, and you're going relative volume. You're going, okay, that's 298. So the average volume that this thing trades is 250 contracts a day, 240. You're at 72, 71.55. Do you think that option market maker might be out of position? Okay, that's why relative volume is so important. And we'll show you why he's out of position. We're going to show you how you can tell that he's out of position. We're going to learn that tonight. Again, that's why you might want to save this one. But this was such a great teaching lesson. I figured, heck, let's go for it. Volatility. I wonder who has the largest volatility percentage change of any stock. Why, I'm glad you asked. It happens to be Krispy Kreme. Here, see how they're all ranked? And to just put this in perspective, 282 to 63%. And that's clean energy fuels. Like this is a huge number. For example, if I go here to relative volume again, okay, the second one is Stoke. So you start looking at how far off these numbers are, and it tells you really just how strong this is. And the implied volatility is now 85.9 with a 282% change in implied volatility. And so you're at one of the lowest levels, and guess what? You're not anymore. So now you know how you can sort during the day and see what option market maker, one, might be out of position, two, what are the options everybody's buying. Now there's a way to do that through this system as well, But to me, there's a much cleaner way to do that. And you can see the implied volatility here as well. So now, even if he wants to pay, meaning the option market makers, even if they want to pay for protection, well, now he's out of whack. But watch this. Now, this site is Max Pain, and I've used this site before. I'm just going to show you a different way to look at it. All I do is click the options in the video, and you can see it up here, maximum pain. You get it. Apparently, they want me to buy a shirt. So, but you put the name in here. So you go here and you go D, and then what you do is we're going to come to this, and we're going to say, okay, well, the Max Pain was $12.50. Well, of course it was, because that's where you were. But the stock price is 1809, right? So then if we just kind of come here and let's just look at this data. You know, 1809 as of now, 1250. Highest open interest strike is going to be 1250. Well, no one's got that much puts right now, right? Or calls. Open interest amount, total open interest, puts and calls. Look at the call ratio. Okay, that's open interest as of this time. Now watch what happens when you go to volume chart. Where was most of the volume done today? And this, to me, is where it gets really interesting. If you come out and you look at that level right here, 1750. Okay, so 1750, you have 15,840 calls traded there today. Okay? We don't know yet because they have to report that data. So this data is going to take a day, right, for this to put back in. You need them to settle, right? Because you don't know, you have to settle. If you don't have settled data, how are you going to? What you see is that right now. This close, where'd Krispy Kreme close? We'll get to that in a moment. And then you go here and well, these are the puts. They got the 15 puts. What do you think they're more afraid of? You think they're more afraid of the 15 puts? Or do you think you're more afraid of the 17.5 calls? If you were the option market maker and you made all this money, if it stayed under 1750, how are you going to feel? You're going to feel pretty good about yourself, right? All right. So then we would come down here and we would look at max pain. And then we would take a look at these numbers and realize, wow, this is really where they would benefit the most. If they could get all these calls, right, outstanding, because this is the amount of money that they're going to lose in cash right now, right, on these calls, they would benefit greatly if they could keep it in this range. Well, this is how much money they're going to lose there. Now, this is all going to shift when all these numbers settle tomorrow. Remember, we were just looking at 240 contracts of volume, and we just went to 71,000. We just saw that the implied volatility spiked. So you see how we're connecting all the dots? Look at some of this stuff outstanding and how much money they would lose. How much money do you think they're going to lose tomorrow? So then you tie all this together, right? And all three of these sites together, you know that this is where the most volume is. So when you come here and you look at this tomorrow, you know that this is going to be skewed more over this way, right? So now we know that this is 1750, drop this back down and take a look at the stock today. Where did you close? 1735. So he went home happy. They went home and they were in a position where they didn't have to worry about, right? They didn't have to worry about this because they were still under. Now you're at 18 after hours and you get as high as 1830. This becomes problematic for the option market maker off the open. You have a stock that has 16 days short to cover, that has the highest relative improvement of implied volatility out there, bar none, of any stock by a wide margin. And on top of that, you have the highest increase in relative volume of any option out there. Hope that was helpful.